What Forex pairs to trade? What's up, guys? This is Eddie Harvey from eddieoharvey.com. All right, today I'm going to talk to you about Forex pairs. What should you be trading? Is there any pairs you should stay away from? Should you focus on one pair? Let's talk about it. All right, guys, let's get into it. So what Forex pairs to trade? So when you look at the markets, guys, you have your Forex major pairs, your minor pairs, your crossover pairs, all different type of pairs. Let's not even start talking about commodities and metals and indices and all of these different things. Let's just talk about the Forex pairs. So when you look at Forex pairs, guys, there are so many different pairs you can trade. In my opinion, I definitely suggest starting out with the majors, okay? The Forex majors. There are 8 major Forex pairs that you can definitely trade that are paired with each other. When you have the euro, the Great Britain pound, the US dollar, the Japanese yen, Swiss franc, the New Zealand dollar, and I'm missing one, the Australian dollar, okay? And I think that's 7, right? I'm missing one. There's one more in there. It's 8 total, but I'm on a Canadian dollar. There you go. So that's what you want to, I would say, for someone new starting out, guys, that's what you want to focus on. Now, within those majors, what you want to be prepared for, the ones that are going to have the most volatility, meaning have the most movement, which may be a little erratic and is like, ooh, you know, it doesn't move as smooth. You're going to look at some will and some won't, but the most volatile are going to be your GBP pairs. Anything with GBP, your Great Britain pound pairs. So the GBP versus the Japanese yen, the New Zealand dollar, the CAD, right? The USD. So all of those are your GBP pairs. They're going to have bigger ranges and movements where, you know, it may be something that's starting out, it might be a little too much for you. So you have to taper and play with it in your demo account to see how you like the movement of certain pairs. When you look at it, like if you look at, I like the pairs that move fast. I've grown to that point. Like when I first started out, I traded Euro USD primarily. That's the pair most people I think start with because it moves nice and smooth. And it was the pair, you know, one of the first pairs I was taught to trade. But I really, you know, if I see a good movement on Euro USD, I'll trade it. But right now, like my favorite pairs, I try not to have a favorite, but the pair I tend to lean towards most out of the majors, and USD is one of them, Euro USD is one of them. I like, I would say GBP NZD is probably one of my absolute favorite pairs to trade because of the movement that it has. When you start looking at other pairs, like your Euro pairs, some are definitely going to move like the GBP pairs, they're going to move faster. But when you start looking at your Australian dollar pairs and chef pairs and things like that, they're going to have the movement is going to be a little more tapered. So, you know, you'll definitely get a hang and get a feel for like AUD USD as a pair that it has good movement, but it's very slow. USD JPY is a pair that has good movement, but it's slower. So, and those are some major pairs, but they have slower movement. So it might be something starting out that you can take a look at as far as to say, okay, let me see how this pair is moving, or let me look at this. And you got to figure it out for yourself and figure out what works best for you, because you have some people that love certain pairs over others, and you have some people that focus on one pair. So what are my thoughts on that? Focusing on one specific pair, you can, yes, get very, very good at it. There is no right or wrong answer. So if you focus on one pair and you just focus on that pair throughout the day, whenever you're trading, you're going to absolutely learn that pair and learn how that pair moves, and you can become a master of that one pair. But focusing on one pair doesn't work for me, right? So because what I've been taught, and which makes sense to me as well, focusing on one pair makes sense, but I like this analogy even more. What if that one pair is not moving? What do I mean by that? The market is always moving, but what if it's not moving in a form of your trading style and is conductive for you taking an entry? What if it's in a consolidation zone and it's just consolidating, going back and forth, being indecisive, and it's doing that for, let's say, hours to a day or two? Then it's like you got to focus on something else, or you're just going to wait for that pair and be patient enough to wait for that pair to do its thing. Now, depending on your trading style, you might be okay with that. If you're a swing trader, you might be okay with that, because odds are if you're swinging, you're going to take one trade a week, maybe 2, but at least one trade a week, right? So you might just be waiting for that one big movement, that one big push to happen. But I'm an intraday trader. I like being in the market for a few hours, get my trades, boom, in and out. you're a scalper, you're really like, you're looking for smaller, quick movements being out in minutes, right? No more than an hour, you try to be in the market. So you'll get a feel of what works for you. So when it comes to obviously trading any pair is a good pair to trade. As far as what works for you, I suggest if you're new, stick to the major pairs and some of the crossovers, but I wouldn't be doing any of the exotic pairs starting out, like the South African rand and different things like that, or dealing with the indices and things like that because of the volatility on those. Even dealing with metals, okay, and gold and gold is moves great, but even to this day, I really have stayed away from gold. I don't focus on gold, but that may work for you. But if we're talking about just Forex pairs, trading anything, finding what's best for you. But I just suggest starting out sticking to the majors or some crossover pairs because those are going to be the pairs that you're going to see more, and it's going to have be more relevant with trades that come through them because you're talking about the major currencies, okay, that you're able to tap into. But where the movement is going to be more consistent and have a better flow for you to understand, that's just my personal suggestion. Comes down to trading what works for you. Now, is there any pairs you should avoid? Again, no, there's nothing you should avoid from the standpoint of like where it's like, I don't want to mess with that pair. You might get a feel for that because if you take some trades on a pair and you start losing with that pair or that specific currency, you might be like, man, I'm not messing with that anymore. And I did that for a while. Like when I first started trading, I just didn't have success trading anything with the Swiss franc. And I was just like, I'm done with the Swiss franc. I'm not messing with it. And I still really don't trade Swiss franc a lot. I like GBP CHF, which is the Great Britain pound versus the Swiss franc. And I'll trade that if I see a nice movement on it, or USD CHF. Other than that, I really don't mess with the Swiss franc as much. I trade it more now, but for like 2 years, I didn't trade it at all. And I wouldn't take, even if I was taking a trade idea from someone, I would still not take anything dealing with the franc. That was just the way I was with it because it just, man, beat me up a lot when I was first trading. So I was just like, man, I'm not messing with that. But again, there's no pairs to avoid. You can trade whatever floats your boat. You might love Swiss franc, okay? And you might love any pair that has that currency in it. But what I will tell you is that just be on the lookout where if you're going to start out, and if you're new, if you're messing with the GBP pairs, understand that those pairs move fast. So just taper your, if you're trading and if you're going live, you know, use a smaller lot size so you can understand and get a better understanding and the feel of where that pair moves. And then now even better, trade it in demo. So now when you're understanding where you look at, it might be some news that happens, or it might just be a spike where GBP's rolling and you can look up that pair can move in a matter of hours, 100 pips or so, okay? So, you know, those are the things you got to look for. But when it comes to just avoiding anything, no, there's nothing you don't have to avoid. Just if you want to learn something, I always suggest practice it in your demo account first, get good at over there, then go live with it. And the last thing I'll leave you guys with is that depending on what session you're trading, guys, that's when certain currencies are going to have its highest volatility. So if you're trading during a London session, anything with the GBP and the Euro and the Swiss franc, that's when it's going to have its most volatility. Anything with the New York session, USD, Canadian dollar, most volatility. Anything with the Australian session, Japanese yen, New Zealand dollar, the Australian dollar, most volatility. Tokyo session, Japanese yen, most volatility. So if you're saying that if you're going to trade during that specific time, if you're trading during Tokyo, a good thing to trade might be anything with the Japanese yen, GBP JPY, USD JPY, CAD JPY, right? Any of those pairs, Euro JPY, those are different things you can look at. It's just a tip for you to see how they move during that time. If you like a specific pair, just understand that that pair is going to move during it's correlated with its whatever region it's from is going to move when that region is active as far as that time that's that trading session time. So I hope that makes sense. All right, ladies and gentlemen, there you have it. I hope you all got some value from this video. I appreciate you all hopping on here. Before I let you go, guys, 2 things I want to share with you. First being, guys, I have a free cheat sheet, guys, a free cheat sheet you can download, print out, and use called the 14 Forex Do's and Don'ts. I'll share with you 7 things you should be doing and 7 things you should not be doing when you're trading in the markets. I also have a complete 40-minute audio that goes in depth on each step, and I'll also give you a bonus 3-step checklist to ensure that you're having the most success possible when you're trading in the markets. If you want to grab that, head over to my blog at eddielharvey.com, guys, and there's a banner where you could click that banner to take you right to the cheat sheet that you can download and print out and keep for yourself. Second thing, guys, I want to extend to you all an invite to join my free Facebook group, guys. It's called Forex Value, or you can just go to fb.tradewithed.com. Now, if you're interested and want to know where I've learned to trade Forex from, this platform provides trading academies, guys, to teach you Forex and as well as cryptocurrency A through Z. It gives you access to professional educators that are doing live training sessions to help teach you how to trade, and that you can follow and learn their strategies. And also it comes with giving you strategies to help you earn in the markets as well. Obviously, everyone's results varies, but I give a sneak peek of this platform where I share trainings from the educators, some of their trainings, testimonials, results, right, strategies, all these different things I share inside of this group. If you want to get a sneak peek, you're more than welcome to join. All right, so with that being said, I thank you all so much for your time. Guys, if you got value from this video, do me a huge favor. Hit that like button, guys. Leave a comment below. Also, if you want to see more of my content, go ahead and subscribe to my channel and hit that bell above to be notified when I drop new videos. With that being said, I thank you for your time. I will talk to you all later. Take care. Have a great day.